Welcome back to the second user sent in question. Are you ready and excited to start investing and looking into your own stock ownership? This brings us to the second user question, which is how do I select and find a winner stock? What should I look at? What should I do? Thanks again for the comments and questions on that. Please don't forget to like, share, and subscribe if you find this at all entertaining or good to watch. So we will be going over the top 10 things you must look at before you consider buying and or investing into a stock. Okay, so this is to help save you money, help you grow money, and make sure that you do not lose money as best as you can when investing. There is lots of risk when investing into companies. There are thousands of companies out there, and you probably have a finite amount of money that you can devote towards investing in. So it is imperative that you invest your money wisely if you want to have a good financial future. Again, this is all about investing your money, not trading stocks, okay? So this is going to be the focus on finding quality companies to invest in and not to trade in, okay? I want to make sure that is perfectly clear. How are you to find and invest in good stocks? There are many variables and things you need to consider, but we are going to limit it to the top 10 things that I look at when I do my quarterly reviews. We are going to be discussing how do you know what a good stock is? How do you pick out a good stock? What are you doing to identify it? So there's a few things that I want to discuss about this before I go into some of the main things that I look into before investing in an individual stock. So for most people, I would recommend just being the market rather than trying to beat the market. Warren Buffett is well known to having his long-term bet of, hey, money market managers, I'll bet you $1 million that over like a 10-year period of time, you will not be able to outperform the market as a whole. And surprise, surprise, no one's beat him on that bet. So for 99.9% of people, if you are wanting these excellent returns, it's probably best for you to just put your money into an index fund that just follows the market. However, your goals might be different. Perhaps it is to maximize dividends. Perhaps it is for steady income. Perhaps it's to mitigate risk for market fluctuations. And in that case and instance, it might be beneficial for you to perhaps be more invested into these individual stocks. Again, each person's position and situation is a bit different, and there are so many variables and things that you should consider when investing and what will work better for you or your family. Again, please don't forget to like, subscribe, share, and if you have a question or want me to discuss something more in depth, please don't forget to add it in the comment section below. So without further ado, what are the top 10 things that I look at for each of the companies I own when I do my quarterly reviews, when I am looking at increasing my position or decreasing my position, or when I'm going to add a company to my portfolio? So I probably need to backtrack a little bit to explain the quarterly review. So that is, as it sounds, once every quarter, which is 4 times in the year, I will review all my positions and adjust it as needed. I don't do it more than this. I do it this often, and then I set my investing to be a regular weekly investment based on what my quarterly review showed previously in my adjustments there. So the top 10 things that I look at during these quarterly reviews to determine which stocks I invest the most in. The first thing that I do is I look at the chart. I see what the historical trend is, what's its pattern going. Has it hit a plateau like 3 or 4 times but has never seemed to get over that plateau? Is it currently at its peak on that, or is it kind of lower down below? So if it's a stock that's kind of hit the same mark 5 or 6 times, but has not been able to get over that certain price mark, perhaps I will cut back on that position, or I'll sell it off all entirely. I don't know what's stopping it from getting above that certain value. I don't necessarily know. But if it's kind of on that lower position though, if it's significant such and everything else is looking good for the next points that I'm going to talk about, I might actually increase my position on it. So again, I look at the chart. Perhaps it's a company that's just kind of gone up and up and up and up and up. And in that case, again, it kind of depends on all the next variables that I'm talking about as to whether or not I'm going to increase my position or not. Typically, I kind of like a lot of those stocks, but I take a view as to what's been going on with that stock for the past month, what's the past 6 months like, what's the past year, 5 years, and then the whole picture of how has that stock price and that position gone throughout this whole time. So number one, I look at the chart. The second thing that I do is I look at the PE ratio. This stands for its price versus its earnings. So what does it currently cost over how much money is that company making per share? So let's say it's a $100 stock and it is making, let's say, $2 a share. Its PE ratio would be 50. So the first thing that you'll note with a PE ratio is, one, whether or not it's actually making money. Is the company making money? If it's not making money, it'll be like NA right next to its PE ratio. And I avoid companies that are not making money. My philosophy is to make money with these investments. So I do not really want to invest in companies that aren't making money. I don't find that as a winning position. Now, it is true that a lot of these companies have a lot of upside potential. I'm not going to deny that. But a lot of them are frankly losers. And I do not want to gamble away and think that I got the next big thing when there are plenty of good, solid companies out there making good money that I could put my limited resources in and invest in those ones instead. So I invest in companies that first and foremost have a PE ratio. They need to be earning money. The big next part to notice there is if you look at each individual different sectors, they will have different PE ratios. So it's often you'll need to note that if you're trying to invest into a tech company, typically their PE ratio is larger than if you were to do a commodities type stock, one that does like oil or steel or whatever. So you'll need to know kind of what in that sector, what is a typical PE ratio for that stock. And then for that individual stock, how has its PE ratio changed over the last 6 months? So is that stock price kind of running high for at this time, or is it kind of lower? You can kind of get a good gauge by looking at that company's PE ratio over time. And that will help you determine how well priced is it right now and if you're getting that stock at a bargain. So again, number one, I look at the chart. Number two, I look at the PE ratio. I make sure that it's making money and I make sure that it is well priced. Let's say that I have a company that I like, but the PE ratio is a little bit on the higher side than what I would like. I might cut back my position a little bit or make what I am currently buying in my weekly positions, I might lessen that percentage overall while keeping my current holdings being the same. So if a company has changed to no longer actually having a PE ratio and is no longer making money, I will often completely cut that company out. I'll end up selling off my earnings and divert the new funds into companies that I'm liking better at that time. So number three, the big thing that I like to look at here then is the profit margin or the operating margin. So for every dollar that comes into this company, how much of that is actually profit? So typically the higher this percentage is, the more favorable it looks. But again, you also have to look at it's different per each sector. So a dollar that comes into Facebook, a greater percentage of that is profit versus, let's say it's Walmart or a grocery store. The profit margin on those type of companies is far, far less. That doesn't mean that I don't want to invest in like a Walmart type company or a grocery store. It just, you have to know what the profit margin is. Typically, again, the better the profit margin, I think the overall better investment it is. But that doesn't necessarily mean, again, I'm not investing in companies with a lower operating margin. Just note that there's a lot less room for error in those companies. And then you want to track this kind of over time. So again, as I'm doing my quarterly reviews, one quarter, it might be doing excellent. The next quarter, if that operating margin goes into the negative or it kind of starts looking bad and fishy, I might think about, again, cutting back my position or moving on. But again, I want to make sure that they're still having a good operating margin. Number 4, I want to look at the revenue versus the gross profit. How much money is the company making overall? Some of these I'll be going a lot more in depth, as you'll see, and other parts I'm going to quickly kind of flash on by, and the next few is probably going to be that case. I'm going to quick go on by. And then number 5, how much cash does the company have? Pretty overall simple thing to look up, but how much money do they have? So if it's a large company and they have, relatively to their size, very minimal cash holdings, to me that kind of throws off a red flag. That if, let's say, a hiccup happens in the market as a whole, how much headache can they withstand to still be in good standings? There's lots of things that we can't control. There's lots of things that they can't control. But do they have enough cash on hand to withstand an emergency that kind of comes on up? Okay, so again, we're looking at the chart. We're looking at the PE ratio. We're making sure they're making money. We're looking at the operating margin. We're looking at their revenue, gross profit, and how much cash they have on hand. So now we're at number 6. Make sure I do my fingers right. Number 6, what is their debt? How much debt do they have? So this kind of goes in hand with the total cash. How much debt do they have? Now you can go a lot further in depth as to what kind of debts they do have. So by naturally, just like you and your basic finances, if you have debt, you're gonna have debt payments that you're gonna have to cover. So again, I'm looking at the long-term investing part, and I'm gonna take a little moment here to do a little sidetrack spiel. Again, I am not a day trader. I do not claim to be a day trader. I do not participate in that one bit whatsoever. This is investing. So I want to be invested for most of my positions for the long term. So with that said, I want to mitigate a lot of the risk involved with investing. And by that is how I've kind of developed these, what I kind of focus and look at. So that's number 6 is that debt. And too much debt, just like in your own personal finances, it eats up into where you have to put and allocate your money as it comes in. That's the same as it is with these companies, just on a macro level. So that leads me to number 7, which is I look at then their debt versus the revenue. So just like in your personal finances, where ideally you kind of don't want your debt to equal more than what your income is at a given time. So the people will often talk about how if you're going to school or college, you don't want the debt of going to college to equate out to more than what your starting pay is going to be. I kind of use that same principle when I'm looking at a stock. What is their total debt and how does that compare to their total revenue? I don't want to see their debt be greater than the revenue. So if you know anything about stocks and investing, that typically will then mean I am not investing in any REITs or those type of companies because they overload themselves on debt. So when I want to invest in a real estate type company, I typically go a different route that does not equate themselves out to so much debt, especially as a REIT also is required to do so much in for their dividends. Versus then having so much more debt, it puts them in a lot worse position where I really wish they weren't tied down to that 90% payoff in dividends because I feel like that puts them in a bind. So again, number 7, I look at the debt versus the revenue, and I do not want this ratio above 1. Ideally, I want the debt to equal roughly the gross profit or somewhere in between. I am okay with companies then having debt. They pretty much all have debt. Number 8, and if this is applicable for that company, I look at what the dividend yield is. So often this will be anywhere from like a 0.5% to, you'll have some companies up in the 12, 15%, whatever. So you're looking at how much has this changed over time? Has it been continually going up? And what percentage is it at that given time? So if you're really wanting this stock for income or regular income distribution, because there are very tax advantages or benefits from having dividend yield income versus other types of income coming in, this might be a good option to look at. And this number will help you see how much money you will be getting paid in dividends for the amount of money you're putting into it. So if it's let's say the dividend yield is a 5 or 5% for a $100 stock, that means you're getting paid that $5 for that $100 that you're putting in. So things to note on this is how often are they paying it out? Typically it's quarterly, sometimes it's more often. Another thing important to know for the stocks that pay dividends, let's say it's a $100 stock and it's a $5 dividend. When you get paid that dividend, that stock price goes down. It goes out of that stock price, so that you'll get paid that $5, but that stock evaluation is now $95. A lot of people don't understand that, and you're so, why is this stock price gyrating so much and going up and down? Well, there's a lot of factors to that, but a lot of it's the payout ratio. So let's say if you have a company and the payout ratio is as high as, like, let's say 15%, and then you, back to number 1, you look at the chart and you're like, what in the hell is going on with this company? Why is it going up and down so much? What's going on? A lot of that will be to paying off their dividends and then going back up to the cycle. Then they pay off another dividend. So you'll need to take that into consideration and account when you're looking at the chart. Is this stock big on a dividend paying stock? So again, we're going to review it all over. I look at the chart. I look at the PE ratio. I look at the profit margin and the operating margin. I look at the revenue and gross profit. I look at the total cash. I look at the debt. I look at the debt versus the revenue. And then I look at the dividend yield. After I look at the dividend yield, I look at what the payout ratio is. So the payout ratio, so we know what the revenue is, but how much of this revenue are they having to pay out as a dividend? So ideally, I don't like to see the payout ratio be above 60 or 70%. So the higher this payout ratio is, the harder of a burden it takes on that company. So depending on what your ideas with this stock, if you want that stock to continue to, let's say, grow, and then for them to put more money, reinvest it back into the company to grow as a company, well, if the payout ratio is like 80, 90, or even over 100%, well, they don't have money to funnel back into to grow their company. So a lot will depend on here as to what's your overall outlook for this company. Do you want them to continue to exponentially grow like Google? Google doesn't really pay a dividend, but I'm just using them as an example. Or are you wanting a consistent, reliable, steady income with them and you don't really intend for the stock price to increase itself? Then if that's the case, then it's fine then to have a payout ratio of that, 40 to 80%. But if it gets kind of above that 80%, how sustainable is that dividend? And the higher that payout ratio is, the less likely that company will be able to continue to pay out that amount of money consistently, especially if they have any sort of hiccup go on in the company or we do as an economy as a whole. So you want to see a good high dividend yield, but not at the cost of a payout ratio that's way too high. So I'll often look at or hear, hey, on TikTok or on any of those shorts that this stock pay an absolutely amazing dividend and you should look it out immediately and yada, yada, yada. Well, then I look at the payout ratio and I look this company up and I'm like, well, they're paying 150% on, like, that's 150%. So they're having to allocate money from elsewhere to keep that dividend to be what it is. So they are literally paying Peter by robbing Paul, and that is not sustainable. So you really need to, when you're looking at a stock, especially where you want to rely on that dividend, to look at what the payout ratio is as well. Okay? And then the last part, and this isn't one of the main numbers on when you look up the stocks, but you kind of need to understand what the product that company is giving compared to the current economic and social atmosphere. So do I understand how this company makes money, and how do I see their future growth? So if that also looks well, and everything else before that I talked about looks well, typically then I will up my position in that company. So again, as a reminder, I know I've gone over this a few times. I'll look at the chart, make sure the chart's looking good. I'll look at the PE ratio. I make sure that the company's making money and that it's good for that company at that time. I look at the profit margin to make sure that they're making good money for that sector. I look at the revenue and versus the gross profit. I look at the total cash. I look at how much debt that company currently has versus their debt versus the revenue that they're making, and making sure that it is at least a 1-to-1 ratio, with ideally being the debt is less than how much revenue they're making. I look at the dividend yield, and then I look at the dividend payout ratio, and then I make sure again, how does that company make money? Does it look like they're going to be making more money? How is their future growth look at this time? And then I make my determinant, and I go on to the next company, and I look at those 10 things again. Again, there are 1,000 other things that you can look at when looking at a company, or if you should invest into it. This is like a basic 10 little priority things to address if you are wanting to invest into a single stock. For the majority of people, I would just recommend investing into an ETF. It could save you a bunch of time and headache. Just put it as a allocation of however much money you want to invest in per week or per month, and just set it on in there, and you don't have to worry about the continued reviews, because a lot of things can happen with these individual stocks that frankly we as the individual investor will probably, no matter what subscription services you have, we as the individual investor will be like the last to know different lawsuits that may come up, different laws that might change how well they can make money, and it is a lot more risky. So if you're willing to swallow the risk, please, before you buy an individual stock, please at least look at these 10 items first. Make sure that it's a good investment. Unless you're big on the trading. Again, stocks, I would dare say, that are good for trading probably don't fit this criterion at all. They often won't have a PE ratio, but they will go up and down and all around, and you can make a killing and you can lose it all just like that. But I do these 10 things, I review it on over, I set my allocations, and I forget about it until the next quarterly review, and then I adjust it accordingly. So again, if you have any questions on this, please let me know in the comments section below. Please like and subscribe if you found any value to this. Again, my channel is tiny, so any subscription is much appreciated. If you want me to address anything, again, please comment about it. But like, share, subscribe. Let me know in the comments. Ciao.